On the economy, all eyes are on what the Federal Reserve is about to do next and the impacts of further rate hikes on markets and consumers. Joining us to discuss these issues is Ron Paul, former congressman and host of the Liberty Report. Dr. Paul, a pleasure to host you. Welcome to the David Lind Report.
Fine, thank you. Nice to be with you, David.
This week on Tuesday, Federal Reserve Jerome Powell testified to Congress, and he hinted that there would be not just more rate hikes, but he may increase the pace at which the Federal Reserve increases rates. He made a number of statements.
Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher.
Do you agree with the objective, first of all, that we should have a 2% target, and second, the Fed's method of achieving that target today?
Well, I look at it probably somewhat differently than the average investor does, because the first thing is, if we're talking about interest rates, what the Fed chairman says is very, very important. And he said, well, we might have to, lower these interest rates. Things don't look so good. So the next hour, the stock market skyrockets it goes down because they think they're going to raise the interest rates again. And I think that we can't find the truth, because they don't know the truth, because they don't know what the interest rate should be, but they hang on every word. So when the Fed chairman speaks, the immediate reaction should be canceled out because it doesn't make any sense. But most investors on the short run look at what the statement says and how the most of the other investors are going to react, and they might even agree with what I'm saying. They can't possibly know this. Yeah, but today, if they say they're going to raise interest rates, that'll help the dollar. That's going to hurt gold. But that doesn't mean that. But it's just so temporary, because the truth comes out a lot longer. Because I don't believe any of those statistics when they tell you about the CPI. What is the most important thing they should be telling us is what does the balance sheet show? How much monetization of debt is? Is it true that the greater the debt, the greater the inflation is? So what they do is when they have a crisis, what we have to do is help people with their bills. We have to print more money. And those are lies, but they're more deliberate than most people realize, because it was deliberate, because you have to pacify the people. And that is why a lot of people, are satisfied that the government will take care of them. But it also means the bubble is going to get bigger and bigger and bigger, because all bubbles eventually burst. You're
talking about financial bubbles or market bubbles? What are you referring to exactly?
Well, I think all of them. I think the financial bubbles, whatever response to interest rates, but most people look at, the stocks and the bonds. I mean, look at how rocky the bonds have been. And yes, and the other thing is even those who understand that these bubbles are forming, nobody knows when they're going to end, because there's a subjectivity to that of what precipitates the pitching, the pricking of the bubble. But it is well known in Austrian economics that you can anticipate and recognize bubbles, distortions, gross distortions, and that is where things get out of whack, because you can't have a reasonably market economy if you don't have a unit of account. So since 1971, we've had no unit of account, and we've depended on people who will, regulate this. And it probably worked better than it deserved, but it doesn't work forever, because what it does is exactly what has happened. It encourages spending, excessive debt, and believing in themselves that we can always take care of it. Remember, Bernanke said, it doesn't matter, Ron Paul, we know that's right, but we have helicopters. We'll just drop more money down. So they want to solve the problem of inflation, and the inflation is the increase in supply of money. And they say, well, we'll solve that problem by printing more money. It makes no sense. It's all based on a pile of lies, some deliberate and some totally out of ignorance.
I want to just draw your attention to the screen here. I have here a chart from the BLS. I know that CPI data may not always be perfectly reflective of reality, but here is a chart showing how goods and services in the United States have grown or depreciated in price over the last 20 years. Now, in the red lines, you see things like hospital services going up 2 times over the last 20 years, Dr. Paul. College tuition fees, medical services, wages have gone up, housing, food, all these things that we need to survive, our basic necessities, have all gone up in the CPI index. In the blue lines, we see things that have gone down: new cars, clothing, cell phones, toys, computer software. So a lot of high-tech goods and services, mainly manufactured abroad, Dr. Paul. When you look at this, you think about inflation. We talk about fixing inflation and fixing the economy. Why is it that things that are produced domestically have gone up in value while things produced presumably abroad have gone down in value? What's causing this disparity, Dr. Paul?
Well, there's still a market out there, and it doesn't challenge Austrian thinking, because it is known that bubbles last till they burst, and planning, you can't tell. You know when there's bubbles, but you don't know when they're in a burst. And the other thing is, a lot of people say, well, if you have inflation, you spend too much, you print the money, you pay your bills, and prices go up 5%, and salaries go up 5%, and wages go up 5%, and everybody's happy. If that were the case, there'd be no problem. But it is deliberately, it doesn't work that way, because there is always a human activity going on out there making decisions. No matter if you live in a communist country or another country, people will sort this out and distribute those funds in a certain way. So foreigners may compete, but there'll be shifts. There'll be a psychological reasons. Well, maybe the next bubble is farm property, or maybe the next bubble is automobile, and that's normal, because there's there is a subjective decision making by individuals. But it's so unfair, because this idea where some prices go up and others don't go up as much, hurts usually the middle class and the poor more than anybody else. And that is where the real problem, and that's when you have the social discord, because it's not fairly distributed, and the money goes into special interest. This whole thing about looking for a CPI, they get the CPI and say, oh, it's going up 8%. But we don't count food and energy. If we did that, it would be 11%, and the people wouldn't want to hear that. So it's all fudged, and it's fiction. And a lot of people, the only way you can find out is who's hurting is go to the grocery store and talk to the people and how they change their eating habits. Because they're the ones who suffer, and they know that the people that are in a different income category, they're doing quite well, might even be benefiting from the inflation.
Final question, I'll let you go, which is how to fix the inflation problem and how to fix the economy. Now, you served on the U.S. Gold Commission a number of years back, so you're very well positioned to answer this next question. Do you think a return to the gold standard would be a possible solution to fix inflation?
Oh, yes, it's possible, and it's good, and we should work for it, but it's not going to happen, not under today's condition. We did it in 1875. We have a Restoration Act, because they inflated for about 15 years with the Civil War, and the price of gold, the ratio to gold, was out of whack. And there was a consensus then to go back on a gold standard, and they did it over a 3-year period. We didn't have a welfare warfare state to do it. Budgets weren't totally out of control, and it was a totally non-event. But that's not available to us today, because all you'd have to do is say, well, we have to cut spending. Oh, okay. What do you want to cut? I'm going to cut everything. I'm going to cut everything 1%, just 1%. There'd be a riot. There'd be riots. There'd be revolutions. You can't cut $5 out of anything. And so the printing is going to continue. The gold standard will not come. But there is a gold standard out there. A couple things have happened favorably, because even though Roosevelt took us off gold in 1934, we got back to legally owning gold in 1975. And so therefore, if you believe that it would be good to back up your paper assets with gold, you can do it. You can still go out and buy it. but we still have to worry about what will the government say if you're benefiting more than they think you should. They might overtax gold. I don't think they'll confiscate gold like they did before, but it's something that is available to people. And the gold, you mentioned the Gold Convention. The one thing that came out of the Gold Commission, and I had a little bit to say about it, and that was that we recommended a gold bullion coin, which was constitutional. The government is supposed to issue the money, and that's how we got the gold and silver mintage since 1986. And it's available to people. Right now, we see Perth gold's having a little bit of a problem. So maybe the American coin still will work because but the whole thing is we declared bankruptcy in 1971, and we cheated everybody else that could, cash in, especially the foreigners at that time. So it's something that could be done, won't be done until it all falls apart. And those people who have been buying gold coins and all are going to be in a ready position to at least survive. And that's what counts. But my goal in life is to talk about that because it's interesting and it hurts a lot of people if you don't understand economics. But for me, whether it's foreign policy or monetary system, I've come to the conclusion that the most important thing we talk about is liberty. And you don't have to listen to the bureaucrats and the lies to lie us into wars and then listening to the Keynesian arguments in colleges that says, well, deficits don't matter. That's why you're worrying so much. No, living in a free society would make a big difference. So that's why if we want to know what to invest in, I personally recommend invest some way or another in the protection of and the understanding of liberty.
All right. Well, Dr. Paul, we'll examine the Gold Commission in a bit more detail next time. Thank you very much for joining me today on the David Lind Report. I appreciate your thoughts, and our audience appreciates your insights. Thank you.
Thank you.